October 15, 2025. The AI sector remains a primary market driver. BlackRock, GIP, NVIDIA, and Microsoft are behind a $40 billion data center takeover to fuel AI growth, while UK startup Nscale secured a $14 billion Microsoft deal. OpenAI's ambitious $1 trillion spending plan over 5 years underscores unprecedented capital demand for AI development, guaranteeing sustained high demand for computing infrastructure and chips. ASML reports booming orders for cutting-edge machines, further validating the AI-driven semiconductor boom. However, the rise of sovereign AI is escalating the US-China tech war, posing geopolitical risks. Fed Chair Powell signaled continued rate cuts, citing rising downside risks to employment despite stronger economic activity. This dovish stance is bolstering risk appetite and driving down U.S. two-year yields. Copper prices are rebounding on rate cut expectations and strong industrial demand, with traders eyeing $12,000. Countering this optimism, J.P. Morgan CEO Jamie Dimon warns of hidden systemic risks, cockroaches, and the bankruptcy of First Brands highlights trouble in private credit markets. The trade war is intensifying, with President Trump imposing 50% tariffs on steel, aluminum, lumber, and furniture. New U.S. fees on Chinese shipping could cost Costco $1.5 billion, increasing import costs for U.S. businesses and raising supply chain concerns. This spat threatens to roil global shipping and impacts corporate margins. ASML's warning of a China slowdown, despite strong earnings, signals potential demand weakness in a critical market for the global tech supply chain. Upcoming earnings from the Magnificent Seven tech stocks are critical near-term catalyst for major indices. Meanwhile, slowing EV sales will cost GM $1.6 billion, signaling headwinds for the entire sector. Despite these risks, ETF inflows have smashed the $1 trillion mark in record time, indicating robust investor demand and persistent market liquidity.